Okay? This section is actually quite, out of all my videos, this one gets the most hits, and I was always amazed at why are we getting so many hits? But I realized there's really very little direction on how do you follow generally accepted accounting principles and disclose this. The handbook says that the tax credits should use a cost reduction method, which means there's a lot of interpretations to that. That means if I get 100,000 of credits and I say, well, 70,000 was related to my wages, I should reduce wages by 70,000. Or when 10,000 was related to material, I should reduce, and some companies do that. It's called cost reduction, and that's GAAP. I said, that's really confusing because it's going to mess everybody up. And what I like is one line. So what I did is I contacted the Institute of Chartered Accountants, and I said, well, it says expense reduction, and tax is an expense. So I'm reducing tax expense. I'm going to put it all through the tax provision because everyone understands that. If I'm getting tax back from the government, I'm reducing my tax provision. So that's the way I recommend how to do it, right? So my adjusting journal entry would be something like ITC is recoverable. Now you might break federal, provincial, current, non-current, right? How much am I getting cash? How much am I getting non-refundable? Okay? And then, if it is related to capital assets, I would do cost reduction on the asset. Otherwise, I would just punch it through my tax provision. Is that the only way? That's the simplest way, and it makes it easy to reconcile Schedule 1 and a whole bunch of other stuff. So it's really going to facilitate an easier review process. But it's not the only way. Like I say, that handbook just says, GAAP just says cost reduction. So as long as you reduce some kind of cost, you should be okay.